learned to an election. Live in the hills, but I still get a spread. Started with a little, but I still reinvest it. Fear how I feel, then you feel like a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down, hold it down, we gon' get it.
All right, ladies and gentlemen, I got your watchlist coming in at April 8th, 2020, and the bear market is back. I want to talk about a huge bear market signal that we saw today. And you see here, I got the 5-year chart. We're going to talk about another time in history to look for. I have a few different comparisons we got to talk about, but something happened uniquely today. We gapped up about 4 or 5%. I think it was like 3.5%. And then we ended up closing red. And now that may not seem too crazy, but if you've been watching the market before any of this crazy stuff would happen, that is a huge swing. And this is a big, big signal. This was one of the biggest days in history today, or at least in the last 10 years that we have seen such a large intraday gain given up and gone. This was pretty much one of the biggest green to reds that you have ever seen. So this is telling us stuff, and we really need to talk about that, what we got coming up this week. And we have earnings, and we made a few different plays, and I have a pretty crazy thesis around some stocks. So I have 2 plays that we made today, and then I want to talk about the ones I'm going to look forward to. This is going to be a more of a larger swing trade with stuff. Kind of disappoints me because it's going to be another bearish trade, and we already have a lot of exposure to some of those. So we're going to see how we're going to want to play this, but I can't wait to share this with you. So, and if you were live, you saw it. I won't get ahead of myself, though. So we got that, got the keys, got the place, all that. Let's not delay. You guys know what you need to do. Drop your thumbs up on the video. Make sure you're subscribed. And if you don't know, we are live Monday through Friday, 30 minutes before open. It's the first link in the description, and it is pinned in the comments. We better see you there in the morning. It's free $99. It costs you nothing to join. YouTube.com/thestockmarket. We made all of these trades live. You got to see this trade that I'm going to talk about live. Oh, man, the questions, you could ask whatever you want. People are there, and just be positive and respectful is all we ask. So there's that. And do not forget the most important thing you need to do. Post your watch list below. Let us know what you're looking at. You got any plays, comments, remixes, anything, post them below. That is what we need to do. Source that information. So right off the bat, this is the key. What we were talking about, the bear market signal, there's a few different things, and it's what we saw. It's when you start seeing these bigger gains get sold off, when you see shorter term moves, and when you see how the market moves, and it does these kind of very aggressive big percentage point move ups and then come down. And even every single day, I pointed this out yesterday, we're seeing 7% days week to week to week. Even 5%, this is usually not normal. Even today seemed kind of smaller in the grand scope of what we saw, but last time you saw this was literally in the peak of 2008 during the crash, where you saw a 3.5% gain turn to a negative. And the crazy part about today, there wasn't that much news. There was nothing that really changed. So I think this is a big reality check, too, to even say the market doesn't need anything to move. And a lot of this, it's kind of running its natural course with digestion. And until you really, the market is looking for the real meat and bones juice of everything. I don't know, meat and bones juice. I think, is that broth? I don't know. But you get what I'm saying. But what you're seeing here is very important. Selling these big gains, and then just the overall volatility. That is another thing. And what this leads to is divergence. Not only has the stock market been going up 5-7% and then coming down, but something we've watched a lot, oil. This is oil, and oil's right back down to $26 there. I think even clipped 25 today, but you could even see it overlaid there with the purple. Oh man, it's at 24.27. Oh man, I had to update that. See, so yeah, again, that's huge. And you could see how this is the Shanghai composite, and we're going to talk about that. I'm going to show you something here, but oil is being crazy volatile. It's hitting 30. Again, this has to do with the news and the rumors and OPEC and all that, but the longer we continue at these prices, the longer you start seeing bigger days of larger moves. The market is still down roughly 20-30%. These are all signals that you are really actually in a bear market. And the fact is, the longer this stays there, the more it solidifies this. So there is divergence going on. You could even see it with different asset classes, the market. And now take a look at the VIX right here. So in the midst of all this, even the gap up, you'll notice something. We gapped up this morning. The VIX didn't even take a crazy candle. So even coming here to the VIX, this was another big divergence. Even the whole day, the VIX didn't move with the market. Even if we start overlaying the two, you'll see they're finally converging here, which isn't good, but I could only imagine what that says. But all day today, even when the market gapped up, even though it had some pre-market moves, at one point it went up, but you'll notice at any other point, the VIX, it never went below a certain level. It kind of just really held. Even when the market was high and was at the highs, it never went where it was even at pre-market when we were up or anything. So pretty much the VIX was not really reacting as much. And that's what I even pointed out today, even when we saw it was such a crazy move at close. And I said, at this point, it's like, it's kind of weird. And this is a big bear market signal, is that the indicators you would see move, you're just starting to see big wild price movements. That's a sign of lack of liquidity. And this was like a 3-point candle in 1 minute, but like bonds, gold, the dollar, nothing moved. Again, all very, very weird, but these are signaling just that. So that is the first key to pay attention for, and this is how you look at the market moving forward. It's going to do this. It's going to have these periods until we either bottom out or we start to see it really again. That's why I think earnings will be important, and then the market will move both before and after, but that will be a big key. Then pretty much the next part I'm going to be looking forward for, so you could kind of even picture this with earnings and the market and everything. I think it's going to reflect 2016 in the market, and I'll go to the chart there and show you. And then at the same time, I also want to compare this to Shanghai Composite. We did that on stream, and I'll show you guys how the market moved and what I'm talking about with that. But what happened in 2016, this was before Brexit, I'm saying at the beginning of the year, but this was following that 2015 flash crash in the markets. That was the first time China devalued their currency. And it made the markets go a little bit crazy, but then you saw a follow-up event in January, and even during those times, oil was a big issue. So this is pretty much this is 2016 here zoomed in. This was the flash crash in August, then you kind of had, you had moves like that too, and you bounced up, then it dropped, and then it came back again, and this is what people are looking for. This is that W-shaped recovery. We've seen that. You saw another W here. Again, this is 2016, but what I'm expecting is something around here where we're kind of selling off again. This time you're hitting more new lows. We keep breaking the new lows. So if we test that, and it did roughly the same thing here. It did this for about a week and a half or so, then kind of held up a little bit here and then started to drop again. And then finally kind of bottomed out a little bit and then went there. But I think we might get something very similar to this. And the volatility around here was bad. And this is what I have any other time to reference. I remember trading at this time. And it makes sense with what we're seeing with the premium. So there's still going to be an opportunity to make money here. But it does definitely get a lot harder here than I think at this point too. I think earnings saved the market this time. So maybe we see a different reaction. Or like I even said today too, on stream, even though we're watching for earnings, this earnings may still be too soon, and this earnings could actually pleasantly surprise some people. And then the next real bad one comes at the earnings after this, but I still think this next earnings is going to be very pivotal. See, so isn't that funny? This is now our chart right now. I was going to show you guys the next point with the Shanghai Composite, but this looks literally just like we were on that 2016 chart in a way. You could kind of see how the market was. It's just spread out a little bit different. But this is what I want to talk about next is here with the Shanghai Composite and pretty much, what's really happened here. And this is where, if you couldn't tell by this point, we're setting up with earnings. I'm setting up swing trades. This is kind of how I'm viewing the market with everything. But just take a look here. This is what happened the first time. So during our virus, think about or when the virus hit us, but when it first started with China, you could take a look over here, January 24th, 2020. We had the first drop and then we came up, but we didn't start dropping until like end of February, March. But, China started crashing on January 23rd. We had a little drop, but then we recovered. So as China had a real big drop and then finally came up, we were up the whole time. So even as China was coming up now, end of February, this is when we started to drop, but you could see China already recovered. And then finally coming towards March 6th and then after March, everybody got hit and then we're kind of coming back up. So why am I saying this? Because I think either we are now on pace with China and all global markets will move the same, or China is now officially the leader in terms of giving us idea of how this is going to play out, because they were the first one to get the virus. They were the first one to implement a lot of monetary policy. Obviously, there is some different stuff, but what I'm looking for, this is either going to be America's first drop in the US where we see this drop and then we recover, and that's what we do that for about a month and then finally come down, or we're all caught up and now this move is pretty much reflecting exactly there. But I'm pretty much saying I have a hunch that we may be following China, but I'm not too sure at this point. But like I said, I have two scenarios now to kind of give me an idea. If one works, it's going to say the other. If the other one doesn't work, it's going to point to the other one. So it's giving us an idea of how to get a pace of this, especially again with earnings, swing trading this. So I'm looking at it in a more broader view, but this is now how we have to move forward, because you see how difficult it is going to be to hit some of these trades. You see how difficult it is. Obviously, shares are one thing, and it's a lot easier with that now. But if you're playing with time and you have premium, the key is going to be ending up in the money by certain dates, or making sure you got good contracts at a good price, so when volatility does pick up, you're able to profit from it. So that is the real main key right here, and that's why I'm trying to kind of set up for this and look ahead and trying to figure out where we're at. So there is that, and then finally, the next thing to aim at, and this is that play idea that I'm talking about, is China stocks. I think they're at aim now, and what I mean by that is, if you guys remember during the trade war, we were saying about delisting Chinese stocks. Senators have talked about this, but one pattern that's different today, and what happened, you guys saw Luckin Coffee, they got investigated last week, but now today IQ, I think that's like the Chinese Netflix, they got something on like, they were faking the numbers or something, a report on that. Baidu owns them. So those are the plays. Those are two of them. We're going to talk to them, but I have other plays. But now, if we start to see a crackdown on fraud in China, I mean, the timing is interesting. The timing is very weird, but compare this to 2001 in all the fraud, like we talked about that, the Paycom, the Enron, anything like that, even 2008. That'll be an interesting thing, but this could also be a form of escalation in a way, or this could be kind of either both foreign impact on the market or how we start treating foreigners and especially China to even get some stuff. It's definitely a political view, but the fact of the matter is, I definitely think that they're going to come in twos. And I said that the first time after Luckin, I just didn't have an idea. And now we're seeing, and you're kind of seeing the company. So that's what I'm going to be looking at. And this is that play thesis that you could kind of watch over here in the next few weeks, the next few months. Even then, it could be related to the bear market in general, but it's also very independent, and it could also have bigger ramifications. You saw what happened with those Chinese stocks. So I'm going to be watching that, but I mean, let's talk about the plays in some other Chinese stocks for you. So let us get into the plays. So right off the bat, the first play we made today was an IQ 12.5 put, June ones, and I paid 90 cents for two of them. So I spent $180. I spent a lot more than I would have liked to, and why do I say that? Is because it's a cheaper stock. So this is the part that sucks with some of these lower price stocks, and then when you play a high premium, is that IQ is... my strike price is $12.50. So even if the stock goes to zero, I mean, I don't know what Luckin's at. I think they suspended trading on Luckin. I mean, when you only have 1.7 million in volume, yeah. So you can't even. I mean, damn, that's crazy. So that's a bad side. I mean, so you should have bought the dip. That's why, again, you guys gotta stay away from the baby mama drama. Any, it doesn't matter. Well, you know what I'm saying. You know what I'm talking about. But even in this case, hypothetically speaking, so if you really think about it, I mean, it's hard to facilitate the transaction. But somebody, let's say they bought a $4 put from you. They agreed to buy the stock from you at $4 a share. So now you have to be able to provide them the shares to be able to profit. Now, if you can't trade the shares, that's one thing. But what I'm saying is that even if the stock goes to zero, so even if you give them a piece of paper that says Baidu in crayon and they still pay you $400 a share or Luckin, excuse me, and they're not, the stock's worth nothing now. Max you would make per contract is $400. So if you spend a lot of money to buy that contract, it defeats the purpose or it gives you a different risk reward. So in the case of IQ now, I got the June contract, so I like that it has time and it covers earnings. And during the midst of it, all of these were expensive. And you'll even see the stock dropped really big. We caught the news, but then it bounced back up. I really think this could be a gift. And again, these types of volatile moves, don't get turned off by us. Don't think it's manipulation. And understand this is like the natural reaction. This is kind of like a traumatic reaction when you see stocks make big moves until it's like, oh my gosh, well, then it reacts like this until something happens, then it's probably going to snap back in one direction. So I got these 1250s. I got them for 90 cents each. I got two of them, so they went up a decent amount. At one point, they went a little higher. They still held up, and we got it in the midst of the news, so even during the bounce, you could see they kind of came up, but the volatility is high, and now this is even something I would say. I even wrote it here. One, I think we're going to escalate a lot of things from here, but also now I think this is going to be reflected in the premium because I have these plays. I want to set up more plays only if the plays are cheap now, but what I'm expecting now after Luckin and then some of this news starting to drop and then some of these Chinese stocks, again, they did good. I would not be surprised to see the premiums go up either with more news coming out. If the news comes out and it's negative, premiums are going to shoot up. The IV, think the airline industry when all that stuff happened, or people's simply expectations. If everybody starts to get worried now about this China stuff, would be surprised. I mean, the China business fear that happened in 2001, 2007, even like 2010, 11-ish. That's a kind of its own fear wave of Chinese stocks. And you could see, we even saw a little bit of it in 2018 or 2019 when they were talking about banning those. So that being said, I mean, I'm relating that here to the play because what you got to watch out for, it is going to be the price of the options. I think, if we could get some with time that are cheap, they're going to be good. But I think after a while, the premiums might start going up regardless of the move. Again, depending on how the market starts viewing this or if this situation escalates. So I got that play. That's the first one. And I spent $180. You see, it's worth almost 300, 400 now. So not bad. Nice gain right there. So far, we got it early. Shout out Mr. Hits, baby. That's the real purpose of the stream alerts and the stream. That was the news. We reacted to the news instantly. There was this news that came out. We got it within the first few minutes. I was actually even kind of slow, but shout out to Cole, baby. Shout out to Chad. The next play I got was a Baidu. So I got Baidu June contracts, and I got the 65 puts. So these are pretty far out here, but thankfully it covers earnings. And I got 7 of these at 80 cents. So these went up a little bit, and it was the same situation, but Baidu closed at 101, and then now even after hours, they've already dropped a few dollars. A few Asian stocks already fell after hours. So even JD started dropping after hours. I think Baba did. I'm not sure. Yeah, they did too. So that's even the next thing I want to talk about here. All the other companies. So these are the next companies I'm going to be looking at. I am going to be watching Baba. I'm going to be watching JD. YY is another company. And if you guys know any good companies or you have any info on some of these Chinese stocks, post them below in the comments. But then there's Pinduoduo, and they're pretty strong. And I think I might grab Pinduoduo puts because they're the strong one. So maybe even though the strong one might usually do the best, they've kind of held up pretty decently. So I think they could be, kind of betting on the quality to fall or kind of everything falling and taking everything with it as far as the Chinese sector and Chinese stocks go. Oh, and then even NEO too as well. But watch those. I think those are going to be important. And it seems like we're even getting moves right now after hours with the chip makers. Intel took a move too. But watch those. We're already in some of those plays already. However, everything else I'm going to be watching HD. And one thing I'm really starting to like here, yeah, even at 200, it's good. But you're noticing HD starting to move big increments. It's had time to decay. But even from the bottom, this is a $50 move on a $200-something stock. That is huge, and this is still in this range. So this could be a good range, and you guys know if you're able to get the HDs, the McDonald's, the low volatility stocks, so those could be good. We have those April plays. Now might be the time to start averaging down. So I remember I talked about that last week. I didn't pull the trigger. I might want to aim for those tomorrow. Then Costco, they did good today. We talked about this one. I said I want to keep it on the list. I'm just going to tentatively watch them. I want to see how they do with stuff. Remember, they reported earlier, so they're going to have a different earnings schedule. Then watch Microsoft, and what makes me want to watch Microsoft, they did bad today. Even though they've been leading and being a lot stronger the past few days, you could even see that here. So they're bouncing at a much different and more solid rate than the S&P. Again, tech has been leading, but Apple today too, that caught my eye. They've kind of been the same way, but Apple really sold off. It's even selling off after hours. They took that hit, but Apple really outpaced in surprising fashion today. Why do I have Pinduoduo up there? That's weird. Maybe that's a sign. Pinduoduo coin or something. I don't know. But watch Apple, then watch Baidu. There's all these Chinese stocks. Boeing. Watch Boeing. They moved a lot. And why do I say this? Because those straddles I called out on Monday, I didn't take them, but it was like $100 both ways. You would have been in the money this morning. However, you fell out the money. So now both sides, you would have went from in the money to both plays losing. So now that play is naturally going to be cheaper. And don't forget, we have a short week. So Good Friday, the market is closed. So we are not going to be able to, you have less time on those contracts. But I'm going to watch Boeing. That could be kind of a later one. That could be a good one to probably get on, assuming it's cheap enough. But I know for a fact those should be cheaper than everything else. I mean, watch here. I played JP Morgan this morning. Oh, I forgot to even talk about that one. That was just the play we made, and I did a quick flip. I did literally exactly what I told you guys I was going to do on the watch list yesterday. So you see here this morning, I got next week's 110 calls because the stock was going up in the morning. Well, we bought it when the stock was down. You see, we bought it at 634. You can see, look, we did it pretty good. It looked pretty. It was 634 there. That's when we bought it. I bought those contracts. How much was it? We got 10 of the April 17th 110s at 12 cents. And then about 30 minutes later, 26 minutes later, at 7 o'clock, I sold 5 of them. Oh, I got 23 cents. I put 22 cents. And I was pretty much able to get my initial investment back. So I spent $120. I sold this. I got like 110, or now I think like 100. 115 or something. So pretty much I spent $5 to get 5 free calls, and now this play even covers earnings, and that's surprisingly just 1 standard deviation outside the money, or standard deviation and a half. But this was exactly what I said. I said I'm going to do a quick flip, and you can see I kind of swinged it. So we bought it here 6:34, then we sold it at what, 7 o'clock? Oh man, right there. See, yeah, that's what I said. That looked pretty. So good timing. We would have got crushed on it. It's the weekly. I don't even know what it's trading at now. I think after hours or coming in and close. That contract is actually still worth 17 cents. So we bought it early. So even though the stock even dropped, that contract, even right with the stock here, that contract's still up from when we got it. So we got a good price on it. But I flipped it. I was hoping, I was trying to play some of that volatility and momentum. Sold out of it, got those free. But watch the banks, like I said, remember, they're going to be the first ones to report, Bank of America as well. And then also on that note, UNH, I would watch them. They're going to be reporting here soon, and they're going to start moving a lot too. These are ones they could kind of surprise. They've been at a weird spot, but going to keep an eye on them. I haven't checked the premium, surprisingly, so I'm going to watch that. I'm going to watch IWM. So those June plays, I got a big amount on that one. We lost a decent amount. They're down a lot. So that play, I'm going to average down once the market starts turning in that direction, but I like it, so I'm keeping an eye on it. It has enough time, but we want to treat that like some of the other contracts in some of these spots and let it come to us here in this. So I still like those. I'm still holding on. Wait, that's Micron. Where is it? What am I? IWM. There it is. So it's same exact thing. Every stock is doing this, hitting the low, kind of coming there. But I'm waiting on that, and pretty much if they're down 60%, 70% here, once we even get back down to the price we got them at, I'm theorizing that the options should be still cheap, but we'll see as long as we don't get any too big of a gap downs. But I'm getting ready to average on those, but not quite yet. I'm just not in a hurry too much. And then now if I go after the Chinese plays and start doing that, I might not even average down and hold on those. So we'll have to see. But I got those. Watch them. Like we said, watch Intel. And then finally, the trifecta, GLD, that play went down 50%. So now we're back to 50%. Pretty much what's going to happen here. I said I'm waiting for that 3-day run-up. I explained that to you guys yesterday, but I didn't realize it. We already just had that 3-day run-up. So pretty much this is a crucial point. For the May contracts, we're either going to hit it or we're about to lose on them. And what I mean by that is that now the market, it will either look like this and drop off if we do start coming down, or maybe gold finally does its rip. But pretty much if it doesn't start ripping up here, those May contracts will start depreciating, and they are not going to come back this time unless it really goes to 180, but that's a very low chance. So the May ones, I might look to get out of these soon. I want to see, but pretty much this is going to be like the last call. It's either about to hit soon, and then it pretty much if it does hit and go up, if I could sell into a good profit, it still has a 50% profit now, and then roll those over into June, July, then I'll do that. And that is the most ideal situation. And then finally, watch TLT. They were down. They came down, but they still held up pretty decent. They're still near that range. Give them a little bit of time. Still holding that play, but we lost some of the gains just like the GLD. But thankfully, the TLTs have more time. So I'm actually just still holding that play, and I like it. I do want to see and pay attention to when TLT starts actually kind of moving again, and if it does break 170, but we will have to see with earnings and the other factors. But that is your watch list, ladies and gentlemen. Make sure you're hydrated, healthy, ready to go. Make sure you post your watch list. Make sure we see you there in the morning. You better keep the armor on. Make sure your helmet is on. Now is not the time to be negative. Got to be positive. You got to balance the budget. You got to stay focused. This is the opportunity. This is where you're going to make a lot of changes, good or bad. Take it. Ride with it, baby. Ride the waves. Ride the punches. What is going to happen? What's going to happen? Set a budget. Set a balance. Set that monthly budget and stick to it. Stay disciplined. Don't beat yourself up if you lose. Don't get too excited if you win, and stay focused. But the code loves you, baby. I love you. I'm going to see you in the morning. Let's go.